Welcome to another 21 Hats Dashboard, brought to you by our sponsor, The Great Game of Business. I'm Lauren Feldman, and I'm here with Gene Marks to talk about the things we think business owners should be following this week. Welcome, Gene.
Hello, Lauren. How are you?
I'm doing great. Great to have you here. Thanks for making time. Gene, you're always writing and talking about the stuff that matters to business owners. I want to start today with a piece you wrote about a new immigration law that's due to take effect in Florida on July 1. It will require businesses with more than 25 employees to use the federal E-Verify system to make sure job applicants are eligible to work in this country. It also expands reporting requirements and penalties for those businesses that fail to comply. You have a problem with this law, Gene. You don't think it goes far enough, correct?
Yeah, it's true. I mean, what I see among my clients, and obviously I'm not located in Florida, I'm in Philadelphia, but I have lots of clients that are in the construction and the landscaping and commercial services businesses, and they constantly come across competitors of theirs that use illegal immigrants or undocumented immigrants in their businesses, and when they do that, they pay these people less, sometimes a lot less. And that way they can go and bid on jobs and win jobs that some of my clients can't win, because they clearly have, a leg up on their costs. And when I look at those companies, I mean, they're like the smallest of companies. I mean, when you become a company of
which companies are the smallest of companies?
The companies that are doing this, that are hiring these undocumented immigrants. It's like the smallest of small businesses. I'm not saying that like larger companies don't do that, but for the most part, as businesses get bigger, 25, 50, 100, 200 employees, you start building in some internal controls. There's more exposure to being whistleblown. There's more, I don't know, you become a little bit more formalistic in your approach. And like I said, I'm not saying that some of these companies don't hire undocumented immigrants. I'm sure companies do. But to me, I think the biggest violators I see is smaller businesses, really small businesses. And that's why when we cap it at just 25 employees or above, I don't think it goes far enough. I think that every business should have to verify their workers with E-Verify and make sure that they are legal and lawful workers and documented.
I'm surprised that you're seeing evidence that the undocumented workers are being paid less by these businesses. We've been through this, acute labor shortage. It's still ongoing. I think the unemployment rate in Florida is, 2.6% or something. Why are those businesses able to pay them less?
Because the undocumented immigrants have no legal standing. So what are they going to do? Complain? They're going to go to the police?
They're going to go to another employer.
Maybe. But I mean, again, those other employers, depending on the size, not everybody hires undocumented immigrants. I mean, most of my clients, most of the businesses I know don't do that. It's not like it's a common practice. This law is out for those companies that do
well,
that.
It's more common in some industries. And keep in mind, we're not just talking about recent immigrants. I mean, there's the DACA cohort and, there are people who've been here for decades who, don't have documentation.
Right. But you see, it's more common in some industries, but that doesn't mean that it's common. So, some industries themselves, like construction, commercial services, you see more evidence of that. In some cases, retail and restaurants. But it's not really a common, it's common a thing.
You wrote in your column that it could represent 6% of the workforce in Florida. That's significant, especially at a time of such low unemployment and in reality a real labor shortage.
It could be as much as 6%. That's exactly right. But then again, 94% of the workforce is not undocumented immigrants. So, it's not a small number, but I don't know if I would say it's common. I mean, something common would be more like, half of the businesses are doing this. You know what I mean?
Well, the other way to look at it is what the impact would be. And as you acknowledge in your piece, it could have a dramatic economic impact if, even if it's enforced just the way the law is written and goes into effect July 1st, let alone if it goes further the way you're suggesting.
Yeah, I mean, it would have an economic impact. I mean, first of all, it would hold employers to the letter of the law and hire documented people that are here legally. And I think that would, provide a better playing field for all employers as well. But I think that ignoring the point of the column, though, is that by ignoring those small businesses that have less than 25 employees, I think, those are the ones, at least I see with my own eyes, those are the ones that are like perpetrating this the most because, they're the ones that sort of go under the radar screen and try to flout the law. And are less, authorities don't go after these companies as much because they seem to be smaller pickings. But I think that this law should apply to everybody.
Well, we can all agree that the immigration system we currently have is broken and desperately in need of reform. I guess I'm concerned, and I would think you would be too, that the solution that you're proposing, and even just the one that's slated to go into effect, could cause a drop of. I think you quoted a figure in your column of $12.6 billion in GDP for Florida. That's a huge impact.
Yeah, some people are estimating that's the way it is, but I think a lot of of what needs to happen is by passing laws like this, it forces the issue with immigration. And I think that's what's going on in Florida as well. Like you said, I think we all agree there is a need for immigration reform. And if we do have laws like this, and if they do have a big economic impact, and if small businesses who make up the majority of businesses in Florida are angered because they not only have to comply more, but now they've got a smaller pool of people to hire, well, hopefully they'll make their voices known to their politicians and the laws will change.
I think you favor those changes. I think you've said here previously that you think that, the real solution to this issue is we need more immigrants because we need more potential employees.
100%. We need more legal immigrants. We need immigrants that have been, blessed by the government to work. And right now, while there's such an impasse, that's not happening. And something's got to force the issue.
I guess I'm concerned that if we force the issue this way, that a lot of people and a lot of small businesses could really be hurt in the process before we get to the solution that we'd like to see.
It could be painful. It could be painful. But again, what isn't painful, and what solution is not going to be looked upon happily by all groups that are involved. I mean, this is an issue that's not one that whatever compromise, if there's ever a compromise, people are not going to walk away happy. But I think that the only way, like you said, necessity is the mother of invention, and things like this that could be painful, I think, is what incentivizes people to vote for legislatures that will fix problems like this. And if there is enough economic pain and there is enough small businesses that are unable to get workers, I think that will resonate.
Well, I certainly agree. We need something to get us to take this issue seriously and come up with a real reform.
Yeah.
Next topic. You recently wrote another piece in which you warned that business owners are about to be hit by two huge tax increases. Can you tell us what you're referring to?
Yeah, sure. The first one has actually already hit us. It's just going to continue into 2023, which is research and development expenses. Right now, if you're a business and you take a tax deduction for your research and development work, which is any work that you're doing to develop new products, even services, and these are expenses like materials, contractors, employees, related overhead to that, outside services that are being done. Before you were able to fully deduct them. Now, starting last year, you can't fully deduct them. You have to right away. You have to amortize them. So before, just to make sure I'm clear, you could deduct all of them in the year they were incurred. Now you have to amortize them over 5 years. So if somebody had $1,000 in research and development expenses, 2 years ago, they could take the full $1,000 deduction that year that they incurred them. Now they can only take 20% of that first year, which means that they're missing out on an $800 deduction that year. And we've seen a lot of clients that were paying an estimated taxes based on prior deductions they got, including research and development. And all of a sudden, some of these deductions were not allowed anymore. They realized they didn't pay enough taxes. So that's one big hit. And that continues.
Let me ask you, before we go to the next one, let me ask you about this one. Did you have a sense of what percentage of businesses qualify for this research and development tax credit?
So it really affects businesses in all areas. It's primarily people that are in any type of fields like pharmaceuticals, medical, but it's also, believe it or not, some manufacturing, plenty of manufacturing businesses as well. So some estimates have put anywhere from 25 to 40% of U.S. businesses take some form of research and development expenses as a tax deduction, when I look at my client base, that number jives in. It's almost half of my clients have some form of research and development expenses. And
Wow.
we encourage them to do that because think about it, Lauren. I mean, you're not sitting still. You're trying to develop new products and services, and there's time and resources and money that go into that. And if you're going to be doing that, and if you've got a good, smart accountant, you'll be encouraged to, take the time and money that you're doing and, deduct that as a research and development expense, which is perfectly allowed.
Do you think there's a significant number of businesses out there who qualify for this and don't realize it and aren't taking it?
I do. And in fact, when I talk to so many groups around the country, I'm always talking about how you need to talk more to your accountants about taking advantage of R&D expenses. And by the way, there's a tax credit as well for R&D expenses. That's another issue. But it is people overlook it because they think that it only relates to engineering firms or pharmaceutical firms. And that is just not the case. And in fact, the Tax Reform Act of 2017 expanded the definition of the R&D tax deduction to include even more businesses. So to your question, I don't think enough businesses know about that deduction. But unfortunately, the deduction itself is, it's not available right now, at least the full deduction in the first year.
Well, let me ask you about that. I mean, I think this is such a great example of why you are so valuable to small businesses. I mean, there just aren't enough people out there who are writing the way you write, who are familiar enough with the way these accounting issues and tax issues work, pointing out, making sure that businesses take advantage of everything they can take advantage of. That said, I'm not sure I would call this a tax increase the way you do. I mean, I understand you're certainly right. It means people may be paying more taxes this year, but in the end, it's kind of a wash, isn't it? It's just a question over how long a period you get to deduct the expense, correct?
Yeah, it's 5 years to take the full deduction, except before we could take the full deduction in the first year. So it's increasing your taxes this year.
Okay.
Not a wash.
Well, over 5 years, it's a wash. It's not what we traditionally think of a tax increase. You're paying a higher percentage. But yes, to your point, you're paying more in taxes this year. I get it.
Yeah. Hence a tax increase.
What's the second huge tax increase?
The second has to do with depreciation. Up until this year, most businesses could take something called bonus depreciation for a vast majority of capital expenditures that they made, which means if you bought furniture and fixtures, machinery and equipment, up to a certain amount, which is, well over $1 million, you could just deduct it, boom, this year, take a full year. So similar to the research and development tax deduction, that immediate deduction has gone away. You have to defer more over the life of the asset. By the way, the assets might be, have a life more than 5 years, 7 years, 9 years, 15 years. So what that means is that instead of taking 100% of that deduction this year, right away in the first year, you're now only allowed to take 80% of that as a first year deduction, and the remaining 20% has to be deferred over the next however many years of the useful life of the asset. Next year, that number goes down to 60%. So whereas in 2020 or 2021, if you had bought a piece of equipment, you could write it off immediately in that year and take a big tax benefit for doing that. Now in 2024, you'll only be able to write off 60% of that cost in the first year.
Are you sure it's 60? I thought you said 50 in your piece.
No, it's 60.
It's 60?
Yeah,
okay.
It's from 80, and then the next level down is 60, and then it goes down to 40, and then 20, and then it disappears altogether after 2025. And remember, that's the first year deduction. The rest gets amortized over the remaining useful life of the asset.
So it's the same issue as with the research and development. It's a wash over the entire period, but an increase in the first year.
Correct. And the bigger issue is that it goes, for an asset, it can go more than 5 years. So you might have to wait, again, 7 or 10 or 15 years before you get the full deduction for that asset.
How is that determined? Who decides how long the life of the asset?
Tax rules do. So depending on the piece of equipment that you buy, or whether it's furniture or whether it's machinery, there's definitions in the code that defines what kind of equipment that it is, and then you determine what your useful life is. Most people, the tax code gives people the ability to make that decision based on a framework of what's called a capital equipment. But what's most important is that you then keep it consistent going forward. So when you buy other pieces of equipment like it, you depreciate it in the same way that you have always depreciated the same type of equipment.
Got it. You referred to another looming increase in your column, I believe, and that's the 20% break on pass-through income. Can you explain that one, and when's that going to hit?
Yeah, you and I are going to be having a lot of conversations about this over the next year or two, I bet you, because the qualified business income tax deduction, which is it's the pass-through deduction, it came about in the 2017 Tax Legislation Act, and it allows anybody, most people, not anybody, but most businesses that run a pass-through organization, an S corporation, a partnership, they can, before their income from that business passes through to their personal income statement, you can take a 20% deduction on that income, which means that 80% of the income passes through to your income statement. And that's huge. If you made $1,000 in your business, you only get taxed on $800 of it under that rule.
And this was completely new in 2017, right? This didn't exist at all prior to that.
Correct. And as you can imagine, it's been super popular among small businesses. And what's going to happen is that rule, as well as a lot of other parts of the 2017, tax legislation, expires, either at the beginning or the end of 2025, depending on the piece of legislation. This in itself, the pass-through deduction expires at the end of 2025. It goes away. So there's going to be a lot of discussion about making a lot of these things permanent, and a lot of these things, or extending them. It's going to be, obviously a political football, and that's going to happen as we get into the election year. At some point, the major candidates are going to start talking, obviously, budget and taxes and tax reform and all of that. And I'm sure the Republicans are going to be pushing hard to make a lot of the things from 2017 permanent, and the Democrats will push, the opposite way. And that's going to be a back and forth that you and I will talk about the pros and the cons.
I'll look forward to that. Last topic, you wrote another piece about how businesses pay salespeople. It's a topic I really am always fascinated by. There's some people who believe in rewarding salespeople by commission. Some people favor the idea of paying even salespeople by salary because it builds more of a team environment. What are your thoughts on this issue?
It's actually not necessarily my thoughts. It's what I've learned. I interviewed a few sales executives in the Philly area. This is for the Philly Inquirer. And because I get this question all the time from my clients, and I'm sure you, right? I mean, when you talk to people in your community, people talk about what do we pay?
Always comes up.
Yeah. And I'll tell you what I've learned. Number one is people generally don't do straight commission deals anymore with employees. I mean, if you hire an independent rep or somebody that's got their own company and you just pay them on commission, okay. But if you bring on somebody as an employee, most companies nowadays, there is some salary involved. So that's number one. The other thing that I learned, which really made sense to me, is that your commission depends on the type of sale. So there are some, for example, if you're running a company and the sales process is long because you're selling property or, big pieces of equipment or machinery or, or airplanes, where the sales cycle could be 6 months or a year and a half, those companies pay salaries and then a smaller commission or a bonus, if and when the sale is closed. So they skew more towards salaries for those types of salespeople when there's a long cycle. For the companies that have shorter sales cycles, like retail, but maybe it's somebody that's selling, roofing services, door to door, or ones where they can close a few deals a week. You know what I mean? Those tend to skew more towards commission-based compensation. So it's a lower salary, but then a higher commission percentage because the person can turn over and close more deals. And I never really gave that much thought until I started talking to some of the sales executives. I'm like, that kind of makes sense, don't you think?
It does. I'm just fascinated by this discussion, and I meet a lot of true believers out there who say, that paying salespeople by commission is just a bad idea because it incentivizes them to sell, yes, but it doesn't incentivize them to be part of the team. And sometimes you have people working at cross purposes because salespeople are making commitments that the company has trouble keeping up with. On the other hand, you run this idea by smart people who do pay commission, and they say you're never going to hire a good salesperson if you don't pay commission. That's what they live for.
Yeah.
So I just think, to me, it's just a really fascinating debate because smart people can end up on either side of it.
Yeah, and I'm on the belief that you want a greedy salesperson. You want somebody that really wants to make money, and I think commission is what it's all about. And your salesperson should be the highest paid person in your company, maybe even making more money than you, and you shouldn't have a problem with that. But it just depends on how much commission you're going to pay. So to me, it's not a matter of whether or not there's commission, but how much. You know what I mean? How it's going to be handled.
Sure, that makes sense. Gene, are you working on anything we should be watching for this week?
Well, I actually just wrote a piece this morning for the Inquirer that's going to address people that are. Why am I forgetting what I just wrote about this morning for the Inquirer? Wait a second. I just wrote about.
You've been hanging around me too much, Gene.
I am getting really old. This is really terrible. I spent. Of course, it was a security one. And once again, I do this every year or two. I talk to some IT experts and got some updates on how businesses should be protecting themselves from getting hacked and data breached and all that. So that was a lengthy piece I just wrote.
And most people will read it and say, yeah, I really should do something about it, and then forget about it.
I know. And then I'm going to write a piece for Entrepreneur this week. I interviewed Queen Latifah just 2 weeks ago. It came out last week for on my paycheck.
Was not expecting that, Gene.
Yes, she was awesome. And
what did you talk to her about?
Well, she came on because she's promoting Lenovo. She's like a spokesperson for Lenovo. They have a small business campaign, and that's fine. We talked about that for a couple minutes, but honestly, she's written books. She had a book out, within the past 10 years about empowering women and women leaders. So I threw out some numbers to her about how there's all these female business owners and entrepreneurs, and yet the lion's share of funding still goes to men. And dude, she went off, and she had some opinions on that. And then she had some advice, for female leaders and entrepreneurs. And she was great. It's a 30-minute conversation. So
excellent.
So I'm going to write about that. I'm going to write about that for Entrepreneur as well.
I'll look forward to that as well. Gene Marks is a CPA who writes weekly on small business for The Guardian, The Hill, The Philadelphia Inquirer, The Washington Times, The Chicago Daily Herald, Forbes, and Entrepreneur. You can also hear him on ABC Radio's Eye on the World with John Batchelor. Gene hosts 2 small business podcasts with Paychex Corporation and The Hartford. This episode was brought to you by The Great Game of Business, which helps businesses use an open book management system to help build healthier companies. You can learn more at greatgame.com. Thank you, Gene.
Thank you, Lauren. We'll see you soon.
Always a pleasure. Have a great week, everyone.